Welcome to today's broadcast on Microsoft's recent and massive 4.3 billion euros investment in Italy. We'll take a deep dive into what this investment means for Microsoft, Italy, and the broader tech landscape, especially as we look at artificial intelligence, AI, and cloud computing. So let's break it down step by step, starting with a summary of what's happening with Microsoft's stock and its overall positioning in the market. Let's start with a summary on Microsoft stock. Microsoft has always been a technology giant, known for innovation and expansion in multiple areas, from personal computing to enterprise solutions. In recent years, Microsoft has turned its focus heavily toward cloud computing and artificial intelligence, AI. This new 4.3 billion euros investment in Italy shows how serious they are about scaling their cloud infrastructure and AI capabilities globally. The initiative is not just about hardware and data centers, it's also about investing in people with a plan to train over 1 million Italians in AI by the end of 2025. This move fits into Microsoft's larger global strategy, where AI is positioned as a key driver of growth. The company is not just investing in cutting-edge technologies, but is also creating the infrastructure and workforce to support it. For investors, this signals that Microsoft is making long-term bets that could significantly influence its market position. Is the market positive or negative? Right now, the market sentiment around tech stocks, including Microsoft, is largely positive. With the global surge in demand for AI and cloud computing, companies like Microsoft are in a favorable position. Microsoft's stock has already risen by about 14% in 2024, fueled by investor confidence in its AI initiatives and cloud expansion. This investment in Italy comes at a time when markets are eager for innovation. With global uncertainties, investors are drawn to tech stocks that promise long-term value, especially those investing in essential infrastructure such as AI. However, while the overall sentiment is positive, it's important to note that macroeconomic factors, such as inflation and interest rates, could still affect the stock in the short term. These factors may influence whether investors continue to hold or sell off their tech stocks as we move into the last quarter of the year. And the next updates from Microsoft. Looking forward, Microsoft has several major updates lined up. The most significant one involves the rollout of the new data centers in northern Italy, which will be fully operational by 2025. These data centers are crucial for supporting the growing demand for cloud services, AI, and high-performance computing in Europe. Another big update will be Microsoft's continuous effort to integrate AI into sectors like manufacturing, healthcare, and public services. With this investment, Microsoft aims to solidify its position as a key player in Europe's digital transformation, offering businesses the tools they need to innovate and compete globally. Moreover, the company is heavily invested in sustainability initiatives. They've already committed to making their data centers in Italy powered by renewable energy sources, demonstrating their leadership in both AI and sustainability. What is Microsoft planning next? Beyond the immediate expansion of cloud and AI infrastructure in Italy, Microsoft has broader global plans that include further developing AI-powered solutions for businesses and governments worldwide. Their focus is on ensuring that AI and cloud services are accessible and scalable across multiple industries. By providing AI training to over 1 million people in Italy, Microsoft is not only equipping the workforce, but also laying the groundwork for future AI adoption. Moreover, Microsoft's AI access principles ensure that this technology is responsibly developed and used. These principles emphasize fairness, reliability, security, and inclusivity, reflecting Microsoft's commitment to developing AI for public good while fostering innovation. In terms of products, Microsoft is planning further enhancements to its AI-driven tools like Microsoft 365 and Dynamics 365. These products will leverage AI to automate more processes and offer advanced analytics, helping companies improve productivity. Will the stock go up or down? Predicting stock movements always involves some uncertainty, but Microsoft's strong positioning in AI and cloud computing suggests a good chance that the stock could continue its upward trajectory. Here's why: AI demand. As more businesses and governments adopt AI solutions, companies like Microsoft that provide the underlying infrastructure and services will benefit from this growing demand. Strategic investments. By investing heavily in both infrastructure and training, Microsoft is ensuring that it will have a significant presence in a growing AI market. Sustainability and innovation. With a focus on renewable energy and sustainable cloud solutions, Microsoft is positioning itself as a future-proof company that is aligned with global trends toward green tech. However, there are risks. Increased competition in the AI space from companies like Google and Amazon could put pressure on Microsoft. Also, any economic downturn or significant changes in regulations could affect its stock price. Overall, while there is optimism, investors should be mindful of these factors. What is the risks involved? While Microsoft is well positioned for growth, there are always risks to consider. First, the regulatory landscape for AI and data privacy is still evolving, particularly in Europe, where stricter data laws may present challenges. Second, competition in the cloud space is fierce. Companies like Amazon Web Services, AWS, and Google Cloud are also investing heavily in AI and cloud infrastructure, which could limit Microsoft's market share. Additionally, macroeconomic risks like inflation and fluctuating interest rates could impact Microsoft's stock performance. If the global economy faces any significant downturns, it could slow down the adoption of AI and cloud services, affecting Microsoft's growth prospects in the short term. Moreover, the success of these investments depends on whether businesses and governments in Italy and other regions fully embrace AI. If adoption is slower than expected, it could take longer for Microsoft to see returns on this large investment. In conclusion, Microsoft's 4.3 billion euros investment in Italy is a landmark move that demonstrates its commitment to AI, cloud computing, and digital transformation in Europe. This investment will have far-reaching effects, not just in Italy, but across the globe, as Microsoft continues to expand its cloud infrastructure and AI capabilities. From a stock perspective, Microsoft is in a strong position, with favorable market sentiment and long-term growth potential. However, risks such as competition, regulatory challenges, and macroeconomic factors should not be ignored. Overall, for investors looking at long-term growth, Microsoft continues to be a key player in the tech space, making it a solid investment for the future. See you next time with more updates. Till then, please share and subscribe.